Hey, Alpha fam, welcome back to another episode of Alpha Commission. Of course, today on Alpha Commission, we are going to cover the massive pump on Bitcoin, which just continues to surge as the stock market surges, as the dollar index weakens relative to its previous position, allowing Bitcoin to essentially retrace the recent drop that it had. And while it hasn't done anything particularly special, the candle itself, which is building up on the daily, is just quite impressive, and so that can be some shock and awe for many people admiring it. Guys, we do have just an amazing green day on the stock market, and so while we've had plenty of red days where the screen was just filled with red, and we've all been accustomed to that kind of muddy red color across the board, we are seeing green across the board, and I think it's making people just a little bit overexcited, okay? So, guys, we know that Bitcoin's going full vitalik on us, but that doesn't mean that we have to. So, make sure to keep your emotions intact. And if you are entering any trades, or if you have been entering any trades, please make sure, as I mentioned in the last video that I uploaded, don't chase the pump. Make sure that you're looking at coins that have good entries, that have those squeeze plays on the daily EMAs that maybe haven't gone off yet, which I was showing you in the EMAs video earlier this week. And so, guys, please keep all of your lessons together and manage your risk, okay? A lot of you guys are going to FOMO into some pumps, and what's going to happen is those candles are going to retrace. You're going to get scared and you're going to lose your money, even though the market is going up, because these coins will take turns going up and down. Guys, today, of course, is Friday, September 9th, and so we do just want to be aware of what's going on. We do have Federal Reserve, members, board members, basically speaking, and so you can pretty much guess what they're saying. The same old, same old. But what's really pivoted is ever since Jerome Powell spoke yesterday, he actually left a little bit of wiggle room in the language that he used, and the market is taking full advantage of that. Now, what I mentioned yesterday was that people who probably aren't that sophisticated in, quote unquote, Fed speak, right? It's kind of like legalese, what lawyers speak, but Fed speak, people who aren't really attuned to that probably didn't notice any significant change in what Powell was saying. But if you've been listening to these Fed zombies for as long as I have, you would have noticed that Jerome Powell left a lot of wiggle room for him to not be as tough as what they've been building up for the last 2 weeks. And so the market, which dumped within the last 2 weeks, decided to take that all back as they've seen, basically as they've seen the dollar come down from this high up here. You see the dollar has actually dropped approximately 1.2%. And while that 1.2% might not seem significant for the market, which is now seeing Canada increasing interest rates, it's now seeing Europe increasing interest rates not just by 25 basis points, but by 75 basis points per each. They are considering that the relative value of the Canadian dollar is going up. The relative value of the European euro is going up. And some of these other countries, which the dollar is measured against, those coins may go up as they start to tighten their policies related to inflation, meaning that their their dollars won't inflate as much as that they have been. So what happens when a dollar inflates? It becomes worthless. And so, if something becomes worth less as inflation kicks in, then if the US is fighting inflation, then the dollar is going to rise. And if those other countries are not fighting inflation, their dollars are going to drop relative to the dollar, which makes the dollar just oppressive. It makes the dollar dominant. And the dollar is what stocks and crypto are traded against. And so that makes it very difficult for stocks and crypto to rise. I hope you understand that key relationship. I hope that illuminates what's going on in the market as we see the euro and the Canadian dollar and some of these other currencies just pop up as their governments start taking responsible actions for inflation. Now, the question is the Federal Reserve going to take some extreme actions later on this month in September? And with Jerome Powell basically leaving some wiggle room for how tough the Fed is going to be, the market just decided that, well, foreign markets are being tough, and the US market might start to go a little bit easier on interest rates. So maybe the dollar has topped out, has maxed out, and that this could end up being a complete downturn. And as you see the dollar breaking down from this parabolic curve, if it continues to break down, you see it's on one side of the curve here. Oops, broke down, popped up some more, had a little bit of life in it, started to build up bearish divergences, and now we're seeing it retrace, and the market is just salivating. It's just waiting for the moment that it breaks this uptrend to the downside, especially this 104. But these levels in here would be quite juicy, because you can see this average uptrend right here. And so there's a couple more. You see it bounced exactly from that uptrend, right? Exactly from this horizontal level. And so there is this kind of space which the market is just salivating over. They want the dollar to drop into this area, and then that can give them the go-ahead to just pop off. If we do look at stocks, I told you guys this is the master key to the market. And some people didn't believe me. Oh, Skyfi, he's just talking, out of his butt again, because just making up all these weird theories. But you know what, guys? Look at how the market has responded to bouncing from my zone here. Look at how the market has responded to just reclaiming this one leg up. Now imagine if we reclaim this second leg up, and if we have a bullish retrace and even test the limits of this macro downtrend, we're going to just have the master key to the potential for yet another bull run, or at least a double topping on our previous bull run, if we are able to secure this area or even breach that downtrend. And most of these indices did breach their downtrend a little bit. They had wicks up above their downtrend. And usually when you break a level on stocks, you tend to come back to test it. And then you often return to, exceed it. So the stock market is very, very greedy right now. They've been in a downturn for a very long time, and they want to push up. Now, if we just zoom in, you can see that they are jumping the gun. Some of the people are jumping the gun, because we pretty much are still in just our local downtrend. And if there is somewhere for us to reject, it is going to be around this area. It doesn't have to be exactly here, but you can see this consolidation here. You can see this wick here. You can see this consolidation, consolidation. So if we get reflected down in this area, or even break up, and then it's just a fake out and we get knocked back down, that could be the scary moment that has capitulation in the entire markets. So Alpha Fam, when I warn you to be careful, I'm being very, very sincere, because this could just be a pop-up to effectively let me go ahead and try to draw something out. What could be effectively some type of, head and shoulders. Now, we can say this played out already. Yes, it did. You can see the measured move from this kind of head and shoulders pattern, and you do see that we really did, basically fulfill the entire pattern right here. And then what could this be? This could be just a bearish retest of the neckline before getting smacked down further. And I'll remind you that on this on this local level right here, while it has been support time and time again in the past, there have been many occasions during crises, which we do seem to have a recession and a and an inflation kind of crisis globally, a kind of global just a financial crisis sort of building up. And if the Fed ends up smacking us down in September, there there's a good chance that we could breach these levels again and even death spiral. Now, is the market ready for that? Is the market really going to take us there? I have no idea, Alpha Fam. We have to let this play out. Currently, I'm feeling optimistic, but I don't want people to FOMO in at resistance. And what you can see is quite clearly we are at resistance on this very local downtrend inside of our macro downtrend. So please use your best judgment. Guys, there's a reason I had a green box here. That was your time to buy. Why would I put a green box there? Why would I comment on it bouncing unless that was the time to buy? Now, of course, we do have, this weird little CME gap. It shouldn't appear on a continuous contracts chart, and so we're looking at the S&P 500. We have this CME gap, and that does suggest that the candles may want to come down to fill it. That could be a fake out to the downside before popping up, effectively making this kind of, it's really a descending, broadening wedge. But what we might do is come down, fill that gap, right, and then pop up, and the measured move is going to be basically the top of the breakdown of this broadening descending wedge, and so that would actually be in line with this type of a target. So either, so I wouldn't get too bearish until we break halfway down the current height that we're at above that green box. I wouldn't get too bearish until we break under that CME gap, until we really, start getting back down here. Really retracing the bottom here. So it's a very tough decision, guys. It's a very tough decision. We could bounce all the way up here and still get rejected to the bottom. So both of these directions are treacherous, and there's plenty of time for the CPI data to come in, which basically we are expecting next Tuesday. This CPI data is probably going to control the direction of the Fed, and then the Fed later on in the month is going to make a decision about whether or not it's going to increase interest rates and whether they're going to be draconian, or if they are going to go easier than what the market expects. And guys, I'm going to just tell you in advance, if the interest rates are 75 basis points, then probably we are going to get smacked down significantly. If the interest rates are 50 basis points, or potentially lower, then we're probably going to have a massive pump on the charts. And so I do believe the next meeting for the Fed is September 21st for their decision. It's not on this calendar. It'll be on the calendar next week, but it should be September 21st. But more importantly, a key date for you guys is going to be Tuesday, September 13th. Watch that CPI data. If it's good news, the stocks may continue to rise. If it's bad news, stocks may continue. I mean, may just suddenly drop. And so right now we know that it looks bullish, and they are just killing time. Look at this. You see these angles that I have pointed out here? Look, there, here it is. Here's the 20th right here. This is the key decision date for the Fed. Let's put it on the 21st, and then what was the date? Thursday, the 13th rather, and then the 13th is going to be the CPI data. So that's going to be right here. So you guys can see that we are right in that territory where the CPI can just kind of slap us down, or it can pump us up, and then we're going to be in another area where the Federal Reserve can either lift us up or smack us down. And so we're going to find out what's going to happen. But I just wanted to give you an update. This is still the master key, guys. And although this is kind of a blunt instrument, it's not the most sophisticated way to understand what's going on. All you really need to know is, are we going to catch support here? And do we break out here? Or do we get slapped down? And are we retesting our lows and getting below 3,800? Losing 3,800, this market is going to hell. And then, of course, achieving over 4,100 on the S&P 500 mini futures, the ES1. Then, of course, probably we're breaking out to the upside, maybe 4,200. It just depends where this thing actually breaks out from. You can see it obviously goes down over time. Guys, let's go ahead and jump over to Bitcoin because we can see that Bitcoin is just making amazing gains here. And what I wanted to point out was that there's no change from my assessment yesterday. Of course, some people do want to argue with me that this is not a Wyckoff distribution schematic, but we have seen retest on Wyckoff distribution schematics before around the sign of weakness. And if we're having signs of weakness here, which by the way, guys, those were clear signs of weakness, okay? Like this is a Wyckoff pattern, guys. I don't know how else to explain this to you. This is a Wyckoff redistribution schematic, and while we can reverse it, we really need to sit on top of 22,000, and then just to be safe, we need to be on top of 22,500, 23,000 to really get a reversal on this kind of range. This is 23,000 approximately up here. So just to recover this kind of top area, 23,000 will be safe. And if you just want to be talking about being back in our old range, then yeah, currently like we're back in our old range, but we are doing this weird kind of retest of this diagonal neckline that we do build in. And then if we get rejected in this area, then basically we've just reclaimed this candle, showed the signs of weakness on the SOW is signs of weakness on this Wyckoff schematic. We've just shown signs of weakness. We've basically retested our weakness and our breakdown, and then we could continue to plummet based upon the Fed, right? The Fed decision or that CPI data. And so we do have a couple days. Look, here's the 13th right here. Let me just mark that out for you. There's the 13th, and where's the 21st? The 21st is right here. So look how close we are to these key dates. There's a lot of opportunity to just get slapped down, even if we just retrace partially or consolidate a little bit at this level. You can see, of course, we do have, some type of, horizontal, supports in this area. And so if we do just end up, just kind of consolidating sideways, I'm not going to be perfect with this one. If we do just end up consolidating sideways, then we still have the chance to just get smacked down. And you can pretty much just think about this the same way you think about any other level. We were using this as support. We lost support. We're coming up retesting support, both diagonal support and horizontal support at the same time. So that's double, basically, resistance. That's double resistance right here. And so, is this thing going to get smacked down, or is it going to be break back up? That's as simple as you have to be. And guys, if you didn't feel too terrible, all right, if you guys didn't feel too terrible about this drop right here, then don't feel too terrible about this pump right here. You didn't lose anything. There's just tends to be a symmetry in charts, right? You see this candle, you see this candle, right? You see this candle, you see these candles, right? You see these candles, you see these candles, right? And so this candle and this candle. Guys, there just tends to be a symmetry in charts. It doesn't mean anything particularly special is happening. In order to have something special here, we really do have to break above 22,000. We have to secure 23,000 convincingly, reclaim this candle, right? Which is only halfway reclaimed due to these candles right here. Maybe we reclaim the rest of this exposed candle and then we sit on top of it and continue to go. That would be quite bullish. And then maybe we try to reclaim these exposed candles up here which was that $28,000 pump that we had been talking about potentially having. Maybe this was just a massive fake out to the downside in order to pump to fill in these areas. There's a CME gap up here, and then maybe it smacks down to hell. Who knows? These things can happen. This is crypto. You can go up as fast as you go down. And so if we do have some type of symmetry like this and this, don't discount that happening. Don't be in disbelief. You don't want to miss the move. And that's why, guys, I had a green box right here on stocks. Again, I mean, I just want to prove it to you. I had the green box here, guys. This is to guide crypto. This isn't, I'm not a stocks trader. This is to guide crypto, right? Also on the NASDAQ, I had my green box here. I said, guys, like the stocks are going to find support in this area. If you are thinking about it, this is the area to be thinking about. And so if you guys didn't consider to grab this area, I mean, you don't really want to FOMO in right when you're at double resistance. You understand what I'm saying? I hope you understand what I'm saying, because I'm just trying to protect my friends and family who are reading, or pardon me, who are watching this video. And of course, if anyone else can, take advantage of that, more power to you. But none of this is financial advice to the public. This is solely for, basically education and, in part entertainment. But guys, this is what I'm seeing. Some people are saying that we have made some type of higher low on the weekly or whatnot, and I don't want to dismiss their arguments. Again, I don't care about what it looks like right now, because it's all up in the air. What I care about is confirmations, and for me, that $22,000, $23,000 is the confirmation of having re-secured this upside with convincing candles on the 4-hour at least, preferably something like a 12 hours or a daily candle. But if this thing just like skyrockets to heaven the way it dropped to hell over here, then those are the numbers that I would be targeting in order to get in. And guys, if we do take a look at our coins, of course, I was considering that Zilliqa. I told you guys that Zilliqa had to recover this level above this wedge and above this yellow triangle here in order for me to be interested in Zilliqa. Before this Bitcoin pumped, which just lifted all boats, right? Like Bitcoin was the gift that saved these altcoins asses, basically. All you had was a distribution wedge, which had broken down. Basically retested the breakdown and could have kept going down. Like that's what happens when things break down. They often retest and then they dramatically fall after that, right? Because basically everyone has lost faith in the asset. But what happened was Bitcoin pumped right at the right time for Zilliqa, saved its butt, and then Zilliqa is suddenly above this type of support zone. And so for Zilliqa, basically it's looking juicy again, right? Let me throw on my EMAs. You can see it's in a daily squeeze play. If Bitcoin can continue to the upside, guys, why wouldn't I recommend Zilliqa? It's in a daily squeeze play. And since Bitcoin is a market leader, that changes the dynamic. I can no longer say bearish. We're underneath the 4, we're underneath the 9. I can say, guys, bullish, we're above the 4, we're above the 9, and we're squeezing with the 21. Brilliant things that you want to see on the daily. So every day does matter. It's not a matter of being, oh, you're bullish, you're bearish, and then you're bullish, and then you're bearish, and then you're bullish. Well, guys, the data gets updated every day. And when you see those crazy spikes on like charts like Bitcoin or on the stock market, what can you do? You want to be an idiot and just keep your old position? Or do you want to be a clever little alpha monkey, not a perma bear, not a perma bull? And do you want to just use your brain and then figure out an entry for yourself? Guys, I taught you how to use EMAs, so consider to use them. If you're underneath the 4 and the 9, on the daily, bad sign. If you're between the 9 and the 21 on the daily, good sign, especially if both the EMAs are pointed sideways or up. That's the ideal condition because that suggests a trajectory to the upside. Guys, let's go ahead and look at Flux. Flux, I told you there was nothing that I could hate on Flux. Flux has just been the dream this entire time. And even if Bitcoin had gone to hell, I still slightly suspect that Flux would have held this green line, this yellow line, this macro line, and it is doing incredibly bullish things. It is setting up for a possible 4-9 pardon me, it's actually already squeezed on its 4 and it's 9 on the weekly, and it is actually just continuing to squeeze on the upside. Let me actually go to the weekly for Flux because it's just so bullish. Yeah, there's no squeezes left. I mean, it's basically done everything. It even popped through the 50 MA. So what's left? What's left for Flux? Flux is going for it, and it's just in that resistance zone, which I mentioned, like you might want to take some profit because if Bitcoin had fallen to hell, then you would have been happy to take your profit in that area. And you can see we're still underneath that area that we could have taken profit. And if we go down to the daily, you can see exactly why you would have wanted to take a profit there. You would have saved yourself 20%, and you would have re-entered on perhaps some of these support levels down here, and then you could have gathered another 20%. So that's like 40% that you could have made, as opposed to just letting it ride and only getting 20%, and then maybe it gets smacked down later and you're still letting it ride, so you never took your profit, and so you made nothing, right? So guys, that's why I say always take your profit, always be selling, put food on your table. Don't be loyal to these coins. These coins will not be loyal to you. One day, all of this will dump, and you'll be happy that you took profit along the way before all of these retraces, so that you were putting money in your pocket and paying yourself for the work that you're doing daily, as opposed to just letting it ride, having no money for a year or whatever, right? Like months on end, having no money because it's just all Flux that you own, right? Like you only owe Flux. And then, the market turns around or has a sudden drop because something happens, a hack, right? Or a competitor that's better, or a system failure. I don't know, guys. Like stuff happens, right? A bear market, right? And then you never cashed out on the way up. You never took profit on the way up. It doesn't mean you don't buy back in, but take some profit for yourself. Pay yourself for what you do. You work an hour trading, at least pay yourself for an hour of work. I mean, guys, like this is common sense to experienced traders. If we go over to CRV, then you can see CRV is basically continuing. The squeeze play that I did mention was being set up on CRV that we were watching for. We did have this fake out to the downside, which is quite common with CRV, and that's why I was mentioning we were going to continue to watch to see if we can hold above that 9. We did hold above that 9. This was the area that I suggested that was looking really good, and then it just went for it, of course, when Bitcoin went for it. And so as this thing is retracing, it's still in a very good posture. And if Bitcoin finds support, even if it retraces a bit, this thing could still potentially be in a good area. So guys, again, like a not financial advice, but just I would really consider to just watch what this thing is doing. It's looking healthy. That's what I want to say. It's looking healthy, guys. And so even if you missed a pump, again, there's always retracements. And so a lot of these altcoins are at levels that we would be very interested in them. Just like ADA, that 50 cent level is really what I wanted to see it break above. You can see this downtrend, it's basically getting rejected from it. You can see this kind of banana pattern. Don't know really what else to call it. It's this Vitalik pattern right here. Basically, it got rejected here. It got rejected here. It got rejected here. This is a declining growth curve, and so we are still underneath that declining growth curve, basically hitting it perfectly on this banana pill up here. And I want to see us sitting above that. Okay, That's my standard. 50 cents, 51 cents, decisively, conquering this 100 EMA, this 89 EMA, just not using it as a limitation, but using it as support. And then we can talk about maybe, conquering these higher levels like we did up here, right? So just ADA, just a little bit repressed right now by the by I guess it's Charles's banana this time, man, not Vitalik's. So this might be Charles's banana. Let's go over to KDA, and basically we can see that weakness is still in the charts, guys. I mean, I'm not gonna lie, like this isn't the best performance by KDA. When you saw Bitcoin just skyrocket 10%, what did KDA do? I mean, it was basically right there. It did basically 5%. So KDA is doing half of what Bitcoin is doing. That is not a strong performance, but, and here's, there's always a catch, right? But you can see it has, just like Zilliqa, Bitcoin has gifted KDA with saving its butt. And so what you can see is that based upon the EMAs, as opposed to previously this just a sick weakness where it was breaking down from the 4 and the 9, just retesting it and then threatening to die, right? Threatening to die. Basically, Bitcoin has saved its butt, pushed it back up into a squeeze play formation where now you have it between the 9 and the 10, and the EMAs, again, guys, like algorithms, bots, okay, institutions, they use EMAs to trade. And so if it can hold on between the 9 and the 10, suddenly we're in this diagonal support zone again. We're above this horizontal support zone, and KDA is looking much better to me, just like Zilliqa. So Zilliqa, KDA, CRV, these are coins that are looking interesting to me, and Flux is just continuing to do what it needs to do. Like, guys, like I've, ever since I mentioned like getting into Flux, like I've never really suggested be out of it, just to buy on pullbacks and sell on pump limitations, based upon measured moves, and that's all you should do. Like you pump 15 to 20%, you take profit. You fall back, 15 to 20%, you buy back in, as long as your EMAs look healthy. Okay, as long as your EMAs look healthy. I am primarily an EMAs trader. I think you guys are getting a bigger feel for this these days. I do show momentum zones because, even if the EMAs look good, I might question a trade if it's violating its momentum zones. But, right now, because of Bitcoin, things are doing what they need to do. Guys, just want to quickly double check and see what the dollar is doing. The dollar has bullishly bounced off of the 21 on the daily. So this could be a massive fake out, and it could end up just reversing back to the upside. I would suggest that it probably does test lower levels. You can see every time it gets to the 21, it does tend to go to the 35 and to the 50, and so maybe the dollar can get to a 107, right? And maybe that's just going to be happy trading. But I would be on retracement alert. Okay, even if that happens, this thing could make a new high. This thing could double top. This thing could do anything that would just slap the market down. Okay, so just be, when we were talking about the dollar looking a little toppy up here, right? You see my arrow, right? Like that's where we should have been thinking about entering our positions, just like those green levels, right, on the stock market that I had pointed out where we could potentially bounce from. There's a reason why I talk about these things. There's a reason why I mark out these levels, because that's where you're supposed to buy. You don't buy in the middle of the move because they can just reverse on you. It's just a much riskier play in that way. USDT, again, it's just coming down, exploring the bottom of my range. And look at this, guys. For people who don't believe in EMAs, look at how it perfectly tested the 50 MA and the 100 EMA just perfectly, boink, bouncing right off of it. Not even hitting the bottom of the range just because the EMAs were basically getting tested first. Again, bots and algorithms, right? These kind of AI driven stuff, like they are using EMAs quite heavily. And so when we get into a squeeze like this on the daily, where you see a candle between the 9 and the 21, what can you count on, Alpha Fam? What are we teaching you here? It's going to get squeezed to the downside, so you can trade on that. You can trade on EMAs. Look at this. When the USDT dominance, right? It's just USDT dominance. It's not something sexy or anything, right? It's just USDT dominance, really an abstraction almost. Look, the candles got in between the 9 and the 21, and what happened? You have three candles in between there, like teasing those levels. What happens? Boom! Massive squeeze to the upside, right? That's the power of EMAs. And no, maybe you don't catch the bottom move, you don't capture the absolute top unless you're like really, really paying attention to your levels and zones and stuff. But you can get quite healthy trades out of this stuff. You can know it's going to be a bad trading day when you see this squeeze coming up. You can see the next day's probably going to be really bad. And if you see this squeeze here, you can see that the next day is probably going to be pretty good, right? And so, today was good for trading, and a week ago or so was bad for trading, right? That's how these EMAs work. I'm trying to teach you guys this stuff so you can do it on your own. I do not want anyone dependent on me. I'm not somebody who thinks, I'm special or anything like that. I am trying to be a teacher and hopefully help you guys. Let's see. The VIX. The VIX is also doing very weird things. Okay, so sorry, my chart is really messy, but you can see it got into a squeeze play to the downside, and so it continues to come down to the downside. And what we're really going to want to watch is whether or not that's going to be a fake out to the downside, and whether volatility is just going to suddenly spike back up, the way that it spiked up here, right? When it bottomed out. And if it bottomed out, maybe we're going to have a massive spike that's just going to be hell for trading. And this was all just a fake out to the downside temporarily. So guys, we're just going to be watching out for these things. I'm sorry, I can't tell you anything conclusively, but if we do break down from this zone and then start to challenge our lows, then we're going to be basically in heaven for trading. And so, yeah, the VIX, the volatility for the stock market, right? That's the VIX, and then the DXY, the US dollar index, and then also USDTD, the Tether dominance, which is the stable coin, which most crypto is traded in. All of those things, if they go up, it's bad for crypto trading. If they go down, it's good for crypto trading. Guys, I'm gonna basically end this episode here. Let me see if I have just any request in the group here. So let's see. No, it looks like I basically covered what everyone was looking for. If you guys are interested in joining the group, of course, I do have a link on the in the description of the video. You can basically see the link if you click through my website. There's nothing really on that website. It's just a link to the Discord to be convenient. So you can go to alphacommission.com if you just want to check out the Discord. And then if you have any questions or if you want to contribute anything, you want to just share information, you want to help each other through this market, please feel free to do so. But man, the Bitcoin just going. I mean, I'm getting these kind of like these summer vibes, right? Like where it just kept going and just left everyone in the dust. But we do have our levels to be thinking about. We have this resistance area to be thinking about, and it's been pumping while we've been recording. And so, guys, just pay attention to whether or not this gets a breakout or not. Let's see. Yep, and stocks still just at resistance, like literally right there at resistance. Let me double check on the NAS 100. NAS 100 looking a little bit more optimistic. I am seeing some kind of breaking breaking of this trend. Let's go to the 4 hour. Yep, I am seeing a little bit of breaking of this trend. So, yeah. So for the NAS, it's doing it, man. It's like it's going for it. But I'll just remind you that the NAS actually did have a breakout on the macro downtrend also, and it ended up being a fake out. So I don't consider that definitive. I think I'm going to go with the S&P here, because the S&P really did respect these lines, these downtrend lines, much more responsibly than the other indices did. Let me just tighten this up a bit. The problem is that we're dealing with ranges that are so huge. It's just hard to get everything perfectly aligned. But there we go. That looks pretty good. So you can see that the S&P did perfectly respect its downtrend line on the macro. And so I think I'm just for today, I'm going to favor the S&P in that it is respecting its downtrend perfectly. And even though the NASDAQ is kind of pumping above that line, let me make that yellow. Even though the NASDAQ is pumping above that line, I don't really consider the NASDAQ to be that honest. You see this kind of breaking from its downtrend, even though it got smacked down. So that was a lie, right? Maybe this is a lie as well. Guys, that was your alpha for the day. Stay safe and happy trading.